Good afternoon, ladies and gentlemen. I am Luando Franklin, the lead tutor and Chief Executive Officer at FCO Accountants Tuition Center. In today's video, we are going to look at post-employment benefits under IAS 19. This topic is specifically ideal for CA 3.1 students under Zika. Please ensure that you like and share this video. And if you have any questions to ask, you can post the question in the comment section and it will be addressed fully. I'll begin by explaining what items go to P&L in relation to the pension expenses. So in the P&L, we have the current service cost, current service cost, the current service cost is an expense in the P&L. Then we have the past service cost. Past service cost occurs when there is an improvement in the pension scheme, or sometimes when there is a decline in the pension scheme. If there is a decline, then it will be shown as a gain, as a minus. Then we have the curtailment. Curtailment gain or loss. A curtailment gain or loss will occur when there is a substantial reduction in the pension membership that could be due to closure of a plant or due to redundancies, and the members opt to be paid what they have contributed. That would result into either a gain or a loss. Then we have net interest income or cost, depending on the situation. Now, it is very important to understand that under pension, we have the pension asset. The pension asset will earn interest. The pension asset will earn interest. And there will also be the pension obligation. The pension obligation will incur a cost. So depending on the situation, for example, if we have the pension obligation, that will be a cost. If we have the pension asset, that will be income. For example, if the pension income is interest income is 200, and the interest cost is 250. So this will be net interest cost of 50. So there we are going to put 50. And the total cost will be the makeup of all these components to be the total cost. And then we have other comprehensive income. Other comprehensive income will be under net remeasurement. Net remeasurement, gain or loss. So this one will go under other comprehensive income. And this will give us the total. Total cost. This will be total cost. That is very, very important. Remeasurement occurs on the asset. The pension asset at the end of the day must be remeasured. The pension obligation, which is a liability, must also be remeasured. As a result of remeasurement, there could be gains or losses. So this is what goes to P&L, and this is what goes to OCI. The net remeasurement gain and losses are not recycled to the P&L. They will remain permanently in the equity. So that is part of the explanation. Now, what goes to the statement of financial position? What goes to the statement of financial position there? We have statement of financial position. The statement of financial position, there you pick the year-end figures. So what will be the pension? Pension obligation at the year-end. Pension obligation at year-end. This could be in kwacha. And then we have pension. Pension asset. For example, if the obligation is 420 million and the pension asset is 320, there will be a net pension liability. Net pension liability, which will be reported under non-current liabilities. So that's how we deal with the questions under IAS 19. Now we can look at a question here together. We can look at a question here together. We have ZAM Pension, a public limited company incorporated in Zambia, prepares its financial statements using international financial reporting standards. It operates a defined benefit pension plan for its employees. At 1 April 2017, the fair value of the plan asset was 27, and the present value of the pension plan obligation was 37. So these are the pension asset and pension liability. The service cost for the year ended at 1st March 2018 was 650. So this 650 is a current service cost, which is also part of the obligation. On 1 April 2017, the pension plan was amended to offer additional benefits to members, resulting in past service cost of 200. This is what we call the past service cost, which is also an obligation. The relevant discount rate for the year ended at 1 March 2018 was estimated at 5%. And ZAM pension paid 950 in contributions to the plan. The pension plan paid 350 to retired members in the year to 31st March 2018. Are we together there? At 31st March 2018, the fair value of the pension plan asset was 3,600,000. That is the closing. The present value of the pension plan was, that is the obligation. So the first thing that we need to do is to find out, to work out the remeasurement gain or losses. The remeasurement gain or loss. And this one, we have the assets and we have the liabilities. We have the assets and liabilities. So the opening, the balance, the balance brought forward, we are told the asset is 27. We can work with thousands. The obligation was 3,000. And now we have the past service. Past service. The past service cost is how much? 200. Current service cost. Current service cost 650. Interest. Interest on the asset there is how much? Interest on the asset is 135, 5%. Interest on the liability, that will give us 165, 160. And then we have contributions made. Contributions will increase the value of the asset, 950. Benefits paid will reduce both assets and liabilities. Benefits paid, we have 320. 320. And we have there 3465. And there 3690. Now, the values at the year end we are given. Value at year end, at end of year, there is 36. So the value at year end for the asset has increased. That is a gain, which will be 135. The liability at the year end was 38. The liability has increased. That is a loss. A loss of 110. So that's how you measure the remeasurement gains and losses. After you have done that, that's when now you can go to the P&L and to the statement of financial position. So here we have the P&L. The P&L, these are in thousands. Current service cost. Current service cost, we have 650. And then we have past service cost. Past service cost, we have 200. And now we have net interest. Net interest, it is a cost because the obligation is more. It is a cost because the obligation is more. The obligation is 160. Under the asset, it's 135. So there is a cost of 25. So these will be P&L 875. And then other comprehensive income, the remeasurement. The remeasurement, here we have, this must be remeasurement gain. Because on the asset, we have 135 gain. On the liability, we have 110 loss. So this will be how much? This should be 25. Total 900. Total pension expense. After we are done with the P&L, we can now work on the statement of financial position. What goes to the statement of financial position? That is very important. What goes to the statement of financial position is important. These are year-end figures. The year-end figures will be shown here. We have this, we are done. We can remove it. So in the statement of financial position, we have KM, we have liability at the year end. Liability at the year end, 38. Then pension asset. Pension asset, 36 at the year end. So there is a net pension liability. Net pension liability. Net pension liability to be reported in the statement of financial position under non-current liabilities. So we have gone through this question together. If you have some questions or issues, do not hesitate to post your question in the comment section of this video. For today, we can end here. Thank you for watching this video. God bless you.